This question tests understanding of manufacturing overhead allocation methods, plant-wide rate, departmental rates, and activity-based costing, and when these methods produce no difference in net income. Key concepts. Different overhead allocation methods mainly affect inventory valuation, ending inventory, cost of goods sold, COGS, timing of expense recognition. Therefore, differences in net income arise when some production is not sold in the same period. Overhead is allocated differently across products and inventory. Important insight. If ending inventory is zero, all production costs are immediately expensed as COGS. In that case, there is no inventory to hold differently valued costs, so allocation methods do not affect income timing. A. All production costs approach those costs that were budgeted. Incorrect. Budget accuracy does not eliminate differences caused by allocation methods. B. The sales mix does not vary from the mix that was budgeted. Incorrect. Even with stable sales mix, different allocation methods still distribute overhead differently across products and inventory. C. All manufacturing overhead is a fixed cost. Incorrect. Even if overhead is fixed, different allocation methods can still affect product cost assignment and inventory valuation. D. All ending inventory balances are zero. Correct. If there is no ending inventory, then all costs flow directly to COGS in the same period. No cost is deferred in inventory. Therefore, net income is identical under all overhead allocation methods. Correct answer. D. Net income will be the same under all allocation methods only when there is no ending inventory, because all costs are fully expensed in the current period, eliminating any differences caused by overhead allocation techniques. This question tests the fundamental principle of cost allocation accuracy, particularly in management accounting and activity-based costing, ABC. Key ideas. The goal of cost allocation is not simplicity, but accuracy and relevance. Accurate allocation depends on how well costs are traced to their actual cost drivers, the factors that cause costs to be incurred. In ABC and modern costing systems, costs are grouped into cost pools, and each pool should reflect a similar cost behavior pattern. Key principle is cause and effect relationship. Costs should be allocated based on the real activities that generate them. To improve accuracy, two main techniques are important: creating homogeneous cost pools, costs with similar behavior grouped together, using appropriate cost drivers that reflect actual consumption of resources. The question asks for the most important criterion in achieving accurate cost allocations. A. Using a simple allocation method. Incorrect. Simplicity may improve ease of use, but it often reduces accuracy. Accurate costing systems may be more complex. B. Allocating fixed and variable costs by using the same allocation base. Incorrect. Fixed and variable costs often have different cost behaviors, so using the same base reduces accuracy. C. Using homogeneous cost pools. Correct. The most important requirement for accurate allocation is grouping costs into homogeneous cost pools, meaning costs within a pool have similar behavior, they respond to the same cost driver. This ensures more precise and meaningful allocation. D. Using multiple drivers for each cost pool. Incorrect. While multiple drivers may improve refinement, they are not the primary criterion. In fact, one appropriate driver per homogeneous pool is often sufficient. Correct answer. C. The most critical factor in accurate cost allocation is ensuring homogeneous cost pools, because this guarantees that costs share similar behavior and can be assigned using a meaningful cost driver. This question tests the concept of overhead allocation methods, specifically when departmental overhead rates are more appropriate than plant-wide rates. Key ideas. Plant-wide overhead rate uses a single overhead rate for the entire factory. Suitable when production is simple and homogeneous. Assumes a single cost driver, e.g., direct labor hours or machine hours, Departmental overhead rates. Assign separate overhead rates for each department. Better when different departments have different cost structures and cost drivers improves accuracy of product costing. Key principle. The more complex and diverse the production process, the more appropriate it is to use departmental rates, because different departments consume overhead differently. A plant-wide rate is related to several identified cost drivers. Incorrect. A plant-wide rate typically assumes one overall driver, not multiple drivers. Multiple drivers would actually support ABC, not departmental rates. B. Individual cost drivers cannot accurately be determined with respect to cause and effect relationships. Incorrect. If drivers cannot be identified, more detailed departmental rates would not improve accuracy. Instead, allocation becomes weaker. C. Cost drivers, such as direct labor, are the same over all processes. Incorrect. If cost drivers are uniform across processes, a plant-wide rate is sufficient, not departmental rates. D. Products manufactured do not pass through the same departments and do not use the same manufacturing techniques. Correct. When products go through different departments, use different processes and cost structures, a plant-wide rate becomes inaccurate, so departmental overhead rates are preferred to better match costs with activities. Correct answer. D. Departmental overhead rates are most appropriate when products use different departments and different production processes, because this allows overhead to be assigned more accurately based on department-specific cost behavior.